Let's shift now to another big story of the day, and that would be the housing market. Not completely out of the woods yet. 4 out of 5 major metro areas here in the U.S. seeing increases in foreclosure activity last quarter, but that means about 20% saw an improvement. To discuss this report, we are joined by Rick Sharga. Rick is Senior Vice President of RealtyTrac, which tracks foreclosures. He joins us now from Irvine, California. Rick, welcome back to Bloomberg News. Always good to have you on.
Good to be here.
Rick, what are these numbers telling us?
Well, I think you just summed it up pretty well, Mark. We're nowhere near out of the woods yet. We believe that we set a near record in the first quarter for foreclosure actions. Over 932,000 homeowners received a foreclosure notice. We did see 159 of the top 200 markets have their foreclosure activity up year over year. And we really don't see these numbers slowing down anytime until probably late 2011.
What will, Rick, ultimately slow these numbers down? I mean, it's an interesting story with the overall housing market, right? Because new home sales, we learned last week, jumped in the latest month by the biggest margin in some 50 years.
Well, keep in mind there's two things that sort of artificially inflated that big jump. One was the sales were coming off near historic lows. And second, we have the expiration of the home buyer's tax credit, which is really accelerating the sales decision, the purchase decision a lot of buyers are making. One thing that will help mitigate the problem of foreclosures, obviously, is continued strong activity on the buying front. The more of these properties that can be gobbled up off the market, the better the overall housing market becomes. The second thing is eventually we'll stop seeing unemployment-related foreclosure activity.
Right.
That probably won't happen until next year, and eventually we'll run out of bad loans, and that will probably not happen until late next year.